Hello, this is Ed Burke with PlaceForTraders.com for Wednesday, April 1st. In this special edition of Futures Outlook, I want to do a follow-up to the video I did back on March 26th on the hog market. If anybody's watching this video who did not watch that video that I did on the hogs market back on March 26th, I encourage you to watch that video. I talked about the fundamental and technical reasons why I thought at the beginning of April the hog markets would start trending higher. Like I said, I encourage you to go back and watch that video if you have not as of yet. If you're watching this on YouTube, it's on my YouTube channel. It's easy to find. Also, if you're watching this on my website, it's on my website, PlaceForTraders.com. Now, back on the 26th, I'm going to draw an arrow to the trading range on the 26th. The market was trending lower. I talked about the reasons why I thought hogs would start going higher at the beginning of April. But I also said there wasn't anything that really excited me about buying it at that exact time, with the market trending lower, obviously. After I did that video, the market did go lower for 2 more trading sessions. And then on Tuesday, March 31st, right near April, surprise, surprise, we had this big turnaround. We had these small ranges where the market was trading lower. Then you see this big breakout to the upside where the market was up 1.42 cents. At 72.40. The market also closed right near the tie, which looks really bullish, in my opinion anyways. Also down here in the relative strength index, I drew the relative strength index. I also drew a trend line at the 50 level in the relative strength index. Back in here, back in January when we made this low, and then you see the corresponding trough in the relative strength index. I'm going to draw another trend line back here in February where we've seen the contract low so far. I'll draw another arrow to that trough in the relative strength index. And then, of course, on Monday, when the market was trending lower and made its low so far. What I like about this, what I pointed out right here, I'm going to put little numbers, 1, 2, and 3. On each one of these troughs in the relative strength index, each one of these has been higher than the one preceding. And between this low that we've seen in January and February, I'm going to try to draw a trend line, and it's going to look terrible. Excuse me. We see a nice divergence between price and the relative strength index. You've seen that the prices were obviously lower, but you've seen higher lows in the relative strength index, which actually gave a nice buy signal back in February, but that's beside the point. But why I want to do this video, I said I would follow up. I didn't like buying it back on March 26th. There was nothing that really encouraged you. The market looked like it was trending lower. I said either way, if the market breaks to the upside or the downside, I'm going to do a follow-up. It's my opinion, like I said, trade at your own risk, but it's my opinion. I think that we might have seen the low now here in the June hog contract. That the low on Monday was around 70.5 cents. So we're now at almost 72.5 cents in the June hog market. That low from Monday was around 70.5 cents. I think that could be the risk that you would look at in the market. Of course, when you're using stop losses, you always run the risk of limit moves or markets gapping through prices when you trade with stops. But that's my opinion. I said I would do the follow-up to the video. Thanks a lot for tuning in. If you haven't gone to my website as of yet, PlaceForTraders.com, I encourage you to do so. Go on and click for the free alerts. Thanks a lot for tuning in, and good trading.